Hello and welcome, TrendSpider users, to this second video in our educational web series from GoNoGo Charts. My name is Tyler Wood. I'm a CMT charter holder, and as always, I am joined by the illustrious Alex Cole. How are you today, my friend?
Very well.
Awesome. So as we continue in this series, we're building off of the ideas that we explained in the first video, just that core checklist of understanding trends. Now, one of the things that I hope everybody took away from that first session was that Alex and I believe this set of tools that is given to us by the technical analysis community is so powerful, so robust. What a great time to be alive that we have all of these tools at our fingertips. We also talked about that rules-based approach, a checklist or an operator guide for identifying the beginnings and ends of trends. And using those technical tools in Confluence, building a weight of the evidence approach, is very responsible. However, the problem with technical analysis, particularly for new practitioners, is that you can become overloaded with indicators. You can develop analysis paralysis, waiting too long to take entries or exits based on your own emotional reactions to what's going on. And the more subjectivity left to the trade decision, the more difficult it is to be rules-based and repeatable in your process. So just as a review, that solution that we came up with was to blend all of the most widely tested, widely used technical indicators in the background and put those into a multi-factor trend model. But instead of leaving it in an algorithm in a black box and telling folks to simply trust me, we wanted to make sure that we put it back into a unique data visualization that everyone can use in real time right on their charts. So what we're looking at right here is the GoNoGo trend indicator. Remember, that's available for free on TrendSpider. So if you haven't checked that out, by all means, go in and add that indicator to your toolbox right after this video. The concept here is that we're capturing all the information from those technical indicators, but removing them from the chart so that we avoid that analysis paralysis. And that allows us to keep our focus on price itself. Alex, talk to us a little bit about why that's so important.
This is one of our favorite quotes, and it's from Mark Abraham. And basically, what it's saying is we need to remember that everything behind the scenes is reflected in price. So let me just read this to you. Ultimately, it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And this consensus is revealed by analyzing price. So it's price that pays. Once that close prints, it's never restated and it's not an estimate. So everything we need to know is in price. So if we can use technical analysis to really understand what's happening, price can be super important for us.
You know, and just to extend that for a second, as informed investors, we can allocate capital to all sorts of securities around the world. Now, I might not have deep knowledge of what's happening inside of Taiwanese semiconductor manufacturers. In fact, I don't really know how semiconductors are manufactured, but all of that fundamental information, everything that we know about the companies that are building those chips, as well as everything that we don't even know that we are missing from our fundamental estimates. That's all captured in price. And I think if you ask any CMT charter holder, they will tell you long-term price trends are always driven by the fundamentals of the operating company or expanding gross domestic product, you name it. But as informed investors, we can use technical analysis to stay on the right side of that without diving into the complexity and subjectivity of all of those fundamental estimates. So, Alex, why don't you review for us those colors of the GoNoGo chart?
Yeah, absolutely. And so we've got 5 colors that we like to paint on our charts, and that takes us through the different market environments. When we're in a go trend, we've got a weak form and a strong form, and those are painted in the different colors: blue for strongly bullish and aqua for more weak bullish situations. Then we've got the no-go trends, where we've got pink, which is our weaker bearish color, and purple, the stronger bearish color. And in the middle there, we've got amber, which represents for us neutrality or uncertainty or indecision. Remember back to the quote from Jesse Livermore about the time to go fishing. Sometimes behind the scenes, all the calculations don't have enough to convince the indicator that we are in an uptrend or a downtrend. But remember, there are 3 movements of the markets, and one of those could be sideways. So we've got that amber neutral bar as well.
So let's look at this in real time. Let's take a look at the S&P 500 on a weekly time frame. So a little longer term view, looking back to the beginning of 2022. We can see that the chart rolls through the colors, right? As the go trends of 2021 come to an end, we cycle through some neutrality and into those purple and pink bearish colors. Now, what we think about as trend followers, and I think for any long-term investor, if they can avoid periods of strong downtrends, if they can avoid the drawdowns on their portfolio and simply participate in the meat of the move, not trying to capture the absolute bottom or the absolute top, we can intend to profit off of the meat of the move. And I think the other point to really narrow in on is the idea that these relief rallies that we experienced in 2022, they were very seductive, right? A lot of investors, including ourselves, rooting for the S&P 500 to come back into a more bullish formation. But when the overwhelming evidence, the collective weight of the evidence suggests that we remain in a no-go trend, we can simply avoid all of this other downward and choppy trading activity. So from a long-term perspective, on a weekly chart, we can identify when those no-goes begin, sidestep the downdraft on our portfolios, and then re-enter when the conditions are optimal to have a long exposure. Alex, just as another quick review, remind us what that checklist looks like on the S&P 500.
Yeah, I mean, this is the same chart that we were just looking at. So, hard to see that period as clearly of struggle. And this, remember, was using that trend identification checklist that we went through in video 1, just to build a good, disciplined process by which to make an intelligent decision. And you can see that there's just a lot happening here, even though this is a relatively simple process. So even if you were somewhere towards the top left, able to decide that we should get out of our positions, then the question becomes, when do we get back in, and where is it? Hopefully it's somewhere before the end of this chart, but are we convinced at any point? We've got to stack up the evidence. We've got to line up those criteria that we outlined in video 1. And then we get that range again where we think, okay, somewhere towards the right side of this chart, all of our indications are that we're starting to move up, but we have to have the sort of the courage to take our conviction and put it to work. And so that brings back in some subjectivity.
And just thinking through that checklist, if we walk this chart or the life cycle of a trade, do you get out when price breaks below the shorter term moving average? Do you get out when the shorter term moves below the longer term moving average? Do you look for a Bollinger Band break? Do you look at your MACD and those crossovers? And I think if we were to trade every crossover of the MACD, that whipsaw could be extremely frustrating for any investor. So when we look at a GoNoGo chart and we think about the number of triggers, right? Right now we're talking about a weekly time frame. We'd simply be looking at 3 trades over the last 3 years, right? To get in 2020, to ride the meat of the move up, to get out when the no-go is fired, and to get back in here in 2023 as the new go trend becomes available, becomes clear on our chart. Now, we've been looking at just the index. We're going to talk about individual securities and multiple asset classes, but we've also been looking at some pretty long-term charts. And many of you may be wondering, well, I'm an intraday trader. I'm not sure if I could use this trend following mentality on such a short time frame. And here's the lesson given to us by Charles H. Dow, the OG of technical analysis in the West, if you will. And he was a very accomplished nautical sailor. He used the metaphor of the oceans to describe what happens in markets. And what he said was the primary trend is like the tides of the ocean. This is unflappable. This exists over very long stretches of time. We're driven by the underlying fundamentals of the corporations or the expanding gross domestic product. Those big macro factors are going to drive long-term primary trends. But just like the oceans, you don't just have the tides, you also have the waves, right? So we talked about the secondary period being those fluctuations that push price action well below or well above that primary drift of the markets higher. So what technical analysts have learned is that the opinion and the behavior of market participants can be very despondent, very pessimistic, or very ebullient and bullish at the end of bull markets and pushing prices well beyond their intrinsic value from a fundamental perspective. And he also identified this minor period or that tertiary trend and those day-to-day fluctuations around the secondary period. And those he compared to the ripples on the surface of the water. And for many of you, trading in very short time frames may be very profitable. That might be where you're comfortable from a objective, your philosophy and approach to markets, and how much time you have to be with and embedded in the markets day to day. So, Alex, let's walk through some examples over multiple time frames, showing GoNoGo charts in those multiple contexts.
For sure. And then we're big believers, of course, in that process of stepping through the timeframes. And we can start really even further out than we did at the beginning. We were looking at weekly charts. This is a monthly chart of Apple, and you can just see the trend. I mean, Apple has been obviously an amazing security. I remember when I had my first iPod, and I thought, man, this is a good innovation. This is fairly disruptive. But if you were purchasing Apple stock back then, well done. But you can see how the traditional idea of looking at price can still be applied here because there's nothing else clouding the chart. So you can see how the pattern emerges of breaking to new highs and then using those breakouts as support going through this large trend. Every time Apple breaks through and surpasses a prior high, we then see that level acting as support. And that's all easy enough to do as we apply these tools and these sort of strategies on the chart because we have the price panel so large. One other thing to point out is we did build that sensitivity into the go-no-go trend. And every time price pulls back from those highs, you see that reflected with the aqua bars. And so we can pay attention in those moments and see, does it continue? Does it roll over? Does it paint something else? Or do we resume the trend? And of course, on the monthly basis, that trend was able to stay in place. But just an incredible example of a very, very strong fundamental and long-term trend.
Absolutely. And when we think about some of the institutional investors that we work with, I mean, this is an incredible drawdown in each of these cases. But what they're looking for is the ability to trade around a position, trimming or adding to. And you can do the exact same thing using multiple time frame analysis. So looking for a logical area of support and where you see that price indeed finds support at that prior resistance. What we're looking for is that polarity principle, right? In technical analysis, where once broken, resistance can become an area of support. But let's step down the time frames, shall we, Alex?
Yeah. So now we can move down to a weekly chart. This is a weekly chart of Apple, and you can see those periods of trend really nicely highlighted by the colors that you see on the chart. And again, we've thrown on some trend line analysis here to show how easily that can be done as well. And we've often found anecdotally that important breaks of significant areas on the chart, such as breaking above resistance levels or breaking above trend lines, consistently coincides with trend change or color change on our chart. So you can see that highlighted here, the large periods of growth with the go colors when it then moves into a no-go trend. And there's even periods of amber go fish there as it tries to recover quickly, but doesn't, continues to set lower highs and lower lows. And then, of course, on that break back above the trend line where we re-entered the go trend, that happens as the color changes as well. So this is just the weekly chart of Apple and currently in a strong go. And we can keep going and take this down to a daily chart. And you can see that with Apple as well, we've emerged out of the no-go that we were in for the past several months. And now we are pulling back from a recent high and painting weaker aqua bars. So another opportunity to pay attention to what's happening. And if that go trend continues, we'll see strong go bars come back and price move and hopefully set a new higher high. But as you mentioned, the time horizon that we operate in can be different for everybody. And this is not to say if you're somebody that looks intraday or trades shorter time frame charts, we can't keep going. This is an hourly chart of Apple. And again, you see the go trend highlighted with the colors blue and aqua. And at this moment, we're seeing that now changing to become a no-go, a relatively new no-go. We had a couple of bars of chop and amber, bars of uncertainty, and now a no-go again. So after that nice run on the hourly chart, we're in a no-go. But we can keep going. Perhaps we look at a 10-minute chart, and this, or even a 1-minute chart this is, and you can see how on a 1-minute chart, we are in a go trend again. So the point to make here is that everybody should have a larger bias, a trend that we're going to say, okay, our view of the market is this, and then we can step down through the timeframes to look at opportunities to get good entry prices, or we can strategically trade around the trend that we think is the movement of the market. When we talked about Charles Dow, we had the primary, the secondary, and the very, very quick moving trends that he talked about. That could be daily and hourly and a 10-minute for you. It doesn't have to be monthly, weekly, and daily. So, but putting it in context, and if you know your daily trend is a go, then perhaps you're looking for opportunities to enter on a 1-minute chart. But that's the point we're trying to make here.
And this applies to folks who are scalping or swing trading or investing over the short to medium term, or even long-term investors that are just rebalancing their portfolio perhaps once a quarter. And so the idea with technical analysis being Fractal is that the tool should work the exact same way no matter what time frame we're on. Now, Alex, we've been using a lot of equity examples, both at the index level and a single security here. What about for folks who trade currencies or commodities traders? The idea of technical analysis for any liquid security, anything that is publicly traded, where there is liquidity, you can use GoNoGo Charts on literally anything around the globe. When we went through the CMT program, obviously you learn a lot from the grandmasters like John Murphy, a fellow CMT charter holder who literally wrote the book on intermarket analysis. But also from folks like Marcos Katsanos that help to quantify what some of those correlations are between the asset classes. And the lesson here for everybody is that regardless of what you trade, you might be an equity-only investor. There is a ton of information to gain from the bond market, from commodities pricing, and from currencies. So, Alex, let's just take a look at a chart using GoNoGo Trend just to get an overall sense of the landscape that we're investing in.
Yeah, and also today with the explosion of ETFs, right, Tyler, we could be actually taking exposure to those asset classes as well, even if we are only trading in the equity space. So from top left, S&P, we're in a Go trend. As we've talked about earlier, these are all daily charts, but we can get a sense of where the trends are around the world. US equities are in a Go trend. We look at the Treasury bond prices, the second chart, also in a Go trend, painting strong blue bars. Of course, those move inversely to rates, so important to be aware of that. But we see equities in a Go. We see Treasury bonds in a Go. We're looking at US oil now, that chart on the top right. And we can see that oil has rolled over quite significantly over the last couple of months. You can see that's a nice chart to see that roll through the colors as well. Strong Go trend, and then it shows some uncertainty, a little bit of chop before finally really catching on to that no-go. We're seeing strong no-go bars now on US oil. If we move to the bottom left there, we've got a chart of Bitcoin. Everybody looks at the cryptocurrency markets now as well, and Bitcoin has been in a really nice move of late. We've seen a lot of strong Go bars, but at the moment painting a weaker aqua bar, but still a Go trend in Bitcoin. Gold, the middle chart, starting to move as well. We've seen a higher low, and now we've moved back into painting those stronger Go colors as well. And on the far right, the US dollar, represented by the UUP ETF, but the US dollar as well rolled over into a strong no-go trend. So we like to talk about how these understanding of the larger picture can really help you as an investor. And it's funny because it sort of goes back to well, for me anyway, I don't know if anybody else would find it funny, but the Jimmy Buffett song, right? It's 5 o'clock somewhere. Well, there's a trend somewhere. And so our job as trend followers is to be diversified, or to at least be aware of what's happening around the asset classes, so that we can use that information to find the trends that can help us be profitable. You could have a year or 2-year patch where there really isn't a trend to talk about in some asset class. So we need to be aware of what's going on around the world, around the asset classes, and find the trends where they exist.
Absolutely. And gaining a lot of context from a chart like this. Yes, treasuries and equities are both in Go trends, but we're certainly seeing a big differentiation in terms of that massive sell-off in U.S. treasuries as rates were rising, prices were falling. Now, for those of you in TrendSpider, you can get a multi-chart layout right in the platform and do some of this analysis yourself, comparing across the asset classes to get an understanding of the overall landscape and start to see some of those correlations appear for yourself. If this all sounds kind of new to you, if macroeconomics is not your favorite place to spend your time, Alex and I are with you every single week. We do publish institutional grade research for subscribers. If you're interested in taking that top-down approach, we do 2 pieces. One longer form narrative at the beginning of each week. That's our flight path that takes a narrative approach, going from the asset classes to the sector groups and down all the way to individual securities. And then we like to practice what we preach, which is at every weekend, Saturday mornings, we send out Launch Conditions, which is a broad chart pack that's going to cover all sorts of global indices, longer term charts, to really help us step back from our trading discipline and develop a plan ahead of the next trading week. So you can check all of that out at GoNoGoCharts.com. And for anybody who has any questions for Alex and I, we are all ears. You can shoot us an email, info@GoNoGoCharts.com. And until next time, take care of each other and trade them well.